You ever feel like you're just drowning in information? Like headlines flashing, data flying everywhere, and you're just trying to figure out what actually matters?
Oh, constantly. It's information overload, right?
Yeah,
Especially in crypto. Acronyms, charts, endless analysis.
exactly. It's tough, really tough to cut through all that noise and find the real insights. And if that sounds familiar to you, well, that's exactly why we do this deep dive.
Mm-hmm.
And today, we're diving deep, really deep, into something that's genuinely making waves across the whole crypto landscape. We're talking about Grayscale's recent filing for a spot Dogecoin ETF.
Yeah, Dogecoin. It's kind of wild when you think about it.
It is. So our mission today is simple. Unpack this, figure out what it really means, not just for DOGE, but for the whole crypto market. And most importantly, connect the dots so you can see why this development actually matters, whether you're deep in the crypto game or just curious about what's going on.
And to do that properly, we've really dug into the sources. We're not just scanning headlines here. We've got the actual regulatory filings, the S1s.
The dense stuff.
The really dense stuff, yeah. Plus market analysis from financial news and, of course, a whole bunch of crypto-specific sources. We want to give you the full picture, the facts, the mechanics, the history, and what might happen next.
Okay, so you mentioned those S1 documents. That seems like the place to start. Because, I mean, Dogecoin started as a joke, right? This feels formal, very formal.
It absolutely is, and that's the key takeaway here. This move takes Dogecoin out of, let's say, the purely internet phenomenon category
Right.
and puts it squarely into the world of regulated finance.
So what exactly happened? What is this S1 filing?
Okay, so Grayscale, who are, a huge player in crypto asset management, filed an S1 registration statement with the SEC. The
Yeah.
Securities and Exchange Commission.
Right.
Now, an S1 isn't just like a press release. It's the official, legally required document you file when you want to offer securities to the public. Think of it like the first step to getting listed.
So it's serious business, very detailed.
Incredibly detailed. It covers everything, the business, the financials, all the risks, what exactly they're offering. In this case, Grayscale wants the SEC's permission to convert their existing Grayscale Dogecoin Trust.
Which is a private thing, harder to access.
Exactly. It's private, less liquid. They want to turn that into a spot Dogecoin ETF that anybody can buy and sell on a stock exchange. It's a very public, very deliberate move towards mainstream finance.
And they're not just floating the idea, they've got specifics, right? A ticker symbol, GDOG, and a listing on NYSE Arca.
Yeah, having those details right out of the gate tells you a lot. GDOG is catchy, obviously, but NYSE Arca, that's a major, highly regulated exchange. They list tons of ETFs.
So the choice signals
Legitimacy.
Legitimacy, absolutely. And preparation for institutional level trading. They're saying, we're ready to play by the established rules. The S1 lays out the whole plan, the fund's goal, how it works, the fees, the risks. It basically puts Dogecoin right in front of the SEC regulators.
Wow. So it's forcing crypto, even meme coins, down these traditional financial paths.
Pretty much. It's a long process, involves a ton of scrutiny, but that's the direction.
Okay, so it's this huge official step. But an ETF isn't just Grayscale, right? There's a whole ecosystem behind it. Who are the key players making GDOG actually work, assuming it gets approved?
That's a great point. The partners involved are crucial for an ETF's credibility, and the structure here looks very much like a traditional ETF, which is important.
Okay, so who's involved?
Well, first, holding the actual Dogecoin. That's Coinbase custody. Their role as custodian is absolutely fundamental.
Custodian meaning they just hold it, like a vault.
Essentially, yes. But a very high-tech, secure vault. They make sure the Dogecoin actually exists, is safe from hackers, isn't lost. They provide that layer of security and trust, usually using cold storage.
Cold storage, that sounds technical. What does that really mean for something digital like Dogecoin?
Think of it like putting gold bars in a bunker completely offline. For crypto, it means the private keys, the codes that control the DOGE, are kept on hardware devices, disconnected from the internet.
Ah, so hackers can't get to them easily online.
Exactly. It minimizes risk from cyber attacks, hacks, even just operational mistakes. Having a trusted custodian like Coinbase custody basically takes the scary part of self-custody away from the investor. It builds that foundational trust.
Okay, so Coinbase custody secures the actual DOGE. But then you've got big names like BNY Mellon and Coinbase Inc. involved too. What are they doing?
Right. Their involvement really adds to that institutional feel. BNY Mellon is set to be the administrator.
Administrator. Like paperwork.
It's way more than just paperwork, actually. They're kind of the operational hub. They calculate the fund's net asset value, the NAV, every single day.
The per share value, basically.
Exactly. NAV is the total value of the Dogecoin held, minus liabilities, divided by the number of shares. Crucial for accurate pricing. But even more importantly, BNY Mellon manages the creation and redemption mechanism.
Okay, that sounds important. What is that?
It's how the ETF stays pegged to the actual price of Dogecoin. When lots of people want to buy the ETF, driving the price up, authorized participants can create new ETF shares by delivering Dogecoin to the fund. This increases supply, bringing the price back down.
And if people are selling?
If people are selling the ETF and its price drops below the Dogecoin value, authorized participants can redeem ETF shares for Dogecoin from the fund, reducing the supply of ETF shares and pushing the price back up. BNY Mellon manages this whole dynamic process. It keeps the ETF price tracking the underlying asset accurately.
Got it. So BNY Mellon handles the plumbing, keeps the price right. What about Coinbase Inc. as the prime broker?
Coinbase Inc.'s role is about facilitating the trading. They handle the buying and selling of the actual DOGE needed for those creations and redemptions we just talked about. They work with those authorized participants, usually big trading firms, to make sure there's enough liquidity.
So they keep the trading engine running smoothly.
Exactly. They're central to that arbitrage mechanism that keeps the ETF price aligned with the NAV. It ensures the fund operates efficiently.
Okay, so let's recap. Coinbase custody for security, BNY Mellon for administration and that crucial creation-redemption piece, and Coinbase Inc. for the trading liquidity. It really does sound like the setup for a regular stock ETF.
It absolutely does, and that's by design. Seeing a name like BNY Mellon, a massive established global bank, involved, that signals serious institutional maturity. It tells traditional investors and their advisors, this isn't the Wild West anymore. This is structured, it's regulated, it follows protocols you understand.
It's like building a bridge for traditional money to cross into crypto.
That's a perfect way to put it. A very robust institutional-grade bridge. It's about building trust and providing regulatory comfort for a whole wave of capital that maybe couldn't or wouldn't participate before.
Okay, this is where it gets really interesting for everyone listening. All this technical stuff, S1s, custodians. Why does it actually matter to you? Let's talk about accessibility.
This is probably the biggest immediate impact. A spot Dogecoin ETF makes getting exposure to Dogecoin incredibly easy and, importantly, regulated. You don't need to directly own the DOGE yourself.
Which means avoiding all the usual crypto hurdles.
Exactly. Think about it. Normally, you'd have to pick a crypto exchange, maybe go through a clunky sign-up, figure out fees. Then you need a wallet, software, hardware. How do you secure your private keys? If you lose them, your crypto's gone. Forever.
Yeah, that security anxiety is real. It puts a lot of people off.
It absolutely does. An ETF just bypasses all of that. For a regular retail investor, maybe someone new to crypto, you can just buy GDOG shares in your normal brokerage account. Same way you buy Apple stock or an index fund. No new accounts, no tech skills needed.
Simple. Familiar.
And for institutional investors, pension funds, hedge funds, wealth managers, it's even more vital. They often have to invest in regulated products. They need auditing, clear reporting, and ETF checks those boxes. It's like buying a basket of Dogecoin managed by professionals wrapped in a format they already know and trust.
So it genuinely democratizes access, removing those barriers for both everyday folks and the big players.
Fundamentally, yes. Lowering the barrier to entry significantly.
But Grayscale doing this now, it's not happening out of the blue, is it? This comes after some huge wins in the crypto ETF space already. What's the bigger picture here regarding the SEC? Is there a regulatory shift happening?
That's crucial context. This Dogecoin filing lands right after the successful launches of spot Bitcoin ETFs earlier this year, and more recently, spot Ethereum ETFs.
And Grayscale was key in those, weren't they?
Absolutely central. Their legal victory against the SEC over the Bitcoin ETF was a landmark moment. Remember, the SEC had been rejecting spot crypto ETFs for years. Concerns about manipulation, custody. They only allowed futures-based ones.
Right. So what changed? Was it just Grayscale suing them?
That lawsuit was a massive catalyst. A federal court basically told the SEC their reasoning for rejecting Grayscale's Bitcoin spot ETF while allowing futures ETFs didn't make sense. It was arbitrary and capricious was the legal term, because the spot and futures markets are so tightly correlated.
The court forced their hand, essentially.
Pretty much. It created a precedent. And in regulation, precedent is powerful. If the SEC approved spot Bitcoin and spot Ethereum ETFs based on similar structures, it becomes much harder for them to say no to a spot Dogecoin ETF unless they find a very specific new problem unique to Dogecoin itself.
So the argument isn't about the idea of a spot crypto ETF anymore. It's about the specifics of this asset.
Exactly. And looking broader, this suggests the SEC might be moving, perhaps reluctantly, towards accepting and regulating crypto products within traditional finance frameworks rather than just trying to block them. It feels like the gates might be opening for more digital assets to follow this path.
That's huge, a potential opening of the floodgates. But Grayscale isn't alone in seeing this opportunity for Dogecoin, right? You mentioned competition.
Definitely not alone. And this is really interesting. Other well-known firms like Bitwise and Rex Osprey have also filed for Dogecoin ETFs.
Bitwise, yeah, they were big in the Bitcoin ETF launches too.
They were. And Rex Osprey also has history in digital assets. The fact that multiple established players are jumping in tells you something important. It's not just general crypto interest anymore. It's specific institutional interest in meme coins.
Wow. So the serious finance folks are looking at Dogecoin, at meme coins, as a real category now, not just a joke.
It certainly seems that way. You can frame it as a race, really. Asset managers are competing to be first or among the first to tap into what they clearly see as a potentially big market segment.
So the competition itself kind of validates the whole meme coin space.
In a way, yes. It signals that these sophisticated players see a real investable market there, driven by massive communities and significant market caps despite the, unconventional origins. It forces a shift in perception away from just internet fad.
Okay, so there's a race on. Multiple players involved. But you said these things take time. SEC approval isn't instant. What's the realistic timeline here? When might we actually see a decision?
Yeah, patience is key. The SEC's review process for these things can officially take up to 240 days.
240 days. That's like 8 months.
At least. And they often extend that. Based on how long Bitcoin and Ethereum took and accounting for potential delays, the best estimates right now point towards decisions landing somewhere between late 2025 and early 2026.
Late 2025 to early 2026, so definitely not around the corner. What happens during that long wait? Is it just silence?
Oh, no, not at all. That 240-day clock isn't just ticking down quietly. There are stages. There's a public comment period first where anyone can weigh in.
Okay.
Then the SEC usually comes back to the filers, Grayscale, Bitwise, whoever, with questions. Requests for more info, maybe asking for changes to address concerns about custody or market manipulation or whatever.
So back and forth. Fine-tuning.
Exactly. And it's very common for the SEC to issue delay orders near deadlines, pushing the final decision back to use the full time allowed. It's a thorough, sometimes frustratingly slow process, and there's always uncertainty until the final word comes down.
Got it. So a marathon, not a sprint. Let's switch to the market then. How did Dogecoin itself react when this Grayscale news broke? Was there an immediate impact?
Oh, yeah. The immediate reaction was pretty clear. DOGE jumped somewhere between 2.5% and 5% pretty quickly after the filing news hit.
Which for DOGE might not sound huge, but context matters.
Right. Exactly. It wasn't just random volatility. That jump showed real bullish sentiment kicking in. Traders and investors clearly saw the ETF filing as a major positive signal, a potential game changer for legitimacy and future demand.
So the market's trying to get ahead of a potential approval.
That's how markets often work with regulatory news. They price in the possibility, buying in anticipation. It definitely showed the market thinks this filing is a big deal for Dogecoin's future.
Okay, beyond that initial pop, what about the charts? Are analysts seeing any technical patterns forming? And what are the key price levels to watch?
Yeah, technical analysts definitely perked up. One pattern people started talking about was an ascending triangle.
Okay, break that down. Ascending triangle.
So, picture a chart. You have a flat horizontal line at the top connecting recent price peaks, that's resistance. Then you have a rising trend line underneath, connecting higher and higher low points. The price bounces between these two lines, getting squeezed into the corner of the triangle.
Like pressure building up.
Exactly. Buyers are stepping in at higher levels, showing strength. It's generally seen as a bullish pattern, suggesting the price is likely to break out upwards through that resistance level.
Okay, so that sounds promising. But you also hear about resistance being tough to break, especially for Dogecoin, around $25 to $0.30.
Right. That different $25 to $0.30 is a really significant area for DOGE historically. Resistance levels are basically price points where there's a lot of pent-up selling pressure. People who bought higher might want to sell there. Others take profit.
Like a wall the price has to climb over.
A pretty solid wall, yeah. It takes serious buying power to absorb all that selling and push through. Looking back, that $21 to $30 range is where DOGE has often stalled or consolidated before. So the initial reaction to the ETF news was bullish, yes, but sustaining that momentum means breaking through that resistance convincingly. That's what everyone's watching now.
This really sets up a broader discussion, doesn't it? Beyond just DOGE. If this ETF gets the green light, what does it mean for the whole idea of meme coins? Is this like the start of a meme coin revolution in actual finance?
It really could be. I think pivotal moment isn't an exaggeration. Approval would mark the formal entry of the entire meme coin category into traditional finance.
Moving them beyond just internet jokes or pure speculation.
Totally. For years, mainstream finance has mostly dismissed them, right? Too weird, too volatile, no real value. And ETF changes that narrative completely. It packages them as regulated financial assets you can buy through normal channels. It's a redefinition.
Which could attract a whole different type of investor who wouldn't touch them before. Institutions, maybe even more cautious retail folks.
Precisely. It confers a level of legitimacy that viral trends or even huge market caps alone couldn't. It makes them palatable for portfolios that need regulated products. Of course, there's that interesting tension. Does Dogecoin becoming legit change its sort of anti-establishment appeal? That's a whole other question.
Yeah, that's fascinating. And if DOGE gets this regulatory nod, does the door swing open for others? Like, could we see a Shiba Inu ETF, a Bianc ETF, even those political tokens?
The domino effect is a very real possibility. Once that precedent is set with Dogecoin, the SEC approving a meme coin ETF, the path becomes much clearer for others.
The argument becomes easier to make.
Exactly. Why approve DOGE but not Shiba if SHIB also has a huge community, market cap, and maybe meets similar criteria? It highlights what people are calling the institutional seriousness of the category now. Firms are looking at SHI, BONK. These coins have massive followings and trading volumes.
And are people already talking about this possibility? Other meme coin ETFs?
Oh yeah, you're definitely seeing speculation and discussion about it in crypto circles and news. It shows the financial industry is actively scouting this space. It's not just Bitcoin and Ethereum anymore. The net is widening to include these more culturally driven, community-powered assets. Even things like political tokens, while niche, show how broad the definition of an asset could become in this context.
Okay, so there's huge potential upside here. Mainstream adoption, lots more money flowing in, maybe even higher prices.
Yeah.
But it's not risk-free, right? We're still talking meme coins. Volatility is baked in.
Absolutely crucial point. It's a double-edged sword. Yes, an ETF brings accessibility and liquidity, which could drive adoption and maybe even smooth out some volatility over the long term. But it doesn't change the fundamental nature of the underlying asset.
Dogecoin is still Dogecoin.
Dogecoin is still Dogecoin. It's driven by sentiment, social media, hype, community energy. Its value isn't tied to corporate earnings reports. It can swing wildly, very quickly, based on things totally unrelated to traditional market factors. An ETF wrapper doesn't change that core volatility.
And the regulatory side isn't set in stone either, even with these approvals.
Not at all. The landscape is still evolving. The SEC could change its mind, introduce new rules specifically for meme coins. Maybe future leadership has a different view. There's ongoing regulatory risk. So for you listening, it's critical to weigh both sides. The potential upside of mainstream access and liquidity versus the real downside of inherent volatility and ongoing regulatory uncertainty. An ETF makes it easier to invest, not necessarily safer in terms of price swings.
Right. Due diligence is still key. Let's connect this to the past and future with some data. Grayscale, as we said, has done this before with Bitcoin and Ethereum. How does that track record influence things?
It influences things massively.
Yeah.
Their success with GBTC and ETH conversions is probably the single strongest bullish argument for GDOG. They didn't just apply and get approved, they fought for it. Remember the lawsuit?
Right, they sued the SEC and won.
Exactly. That victory forced the issue on the Bitcoin spot ETF. It shows they know how to navigate the SEC's process, they understand the agency's concerns, and they're willing to push back hard. They have a proven playbook.
So they're not rookies here.
Far from it. They're veterans of this specific regulatory battle. Combine that experience with the clear investor demand, we saw billions flooding into the BTC and ETH ETFs almost instantly, and it builds a lot of confidence that they can get this done for Dogecoin too. They've paved this road before.
Okay, experience counts. But looking forward, what specific data points should people be watching to gauge GDOG's potential, maybe even before approval or especially after?
Good question. There are a few key things. On-chain data for Dogecoin itself is important. Are we seeing whale accumulation? That means large holders buying up big amounts, usually suggesting long-term conviction.
Whales moving DOGE off exchanges.
Often, yeah, into cold storage. Also, watch for institutional wallet inflows signs that established players are building positions, and just sustained increases in trading volume on reputable exchanges. These can be early signs of growing interest.
Kind of like reading the tea leaves of the blockchain. What about those prediction markets like Polymarket? You mentioned them.
Right. Polymarket is interesting because it reflects real-time market sentiment translated into probabilities. People are literally betting crypto on whether an event will happen.
And what are the odds for a Dogecoin ETF approval there right now?
Currently, they're hovering around, let's say, 67% to 75% probability of SEC approval. That's pretty high. It shows the market collectively thinks approval is more likely than not. It's not a guarantee, obviously, but it's a strong signal of perceived likelihood.
Okay, strong odds there. And finally, looking back again at Bitcoin and Ethereum ETFs, what happened with their assets under management, the AUM, after launch? Does that give us a sense of scale for GDOG?
It absolutely does, and the scale is potentially enormous. The AUM growth for the spot Bitcoin and Ethereum ETFs was just staggering. Billions upon billions poured in within weeks.
From both retail and institutions.
Both. It showed massive pent-up demand for easy, regulated access to these assets. That rapid scaling strongly suggests there could be a similar large pool of untapped capital waiting for a Dogecoin ETF. If GDOG gets approved, we could see substantial inflows mirroring what happened with BTC and ETH. It gives you a tangible idea of the potential impact, potentially moving a big chunk of Dogecoin's market value into these regulated products.
So wrapping this all up, this Grayscale Dogecoin ETF filing, it's clearly more than just another crypto news item. It feels like a potential turning point for meme coins entering the traditional financial world.
Absolutely. It's about making access easier for you, signaling a potentially broader regulatory shift, and kicking off this really interesting competition among major financial players.
Right. So here's something for you to think about after we finish. A little homework, maybe? We've talked a lot about the potential easier access, more money flowing in, and also the risks, the volatility, the regulations still figuring things out. If GDOG does get approved, how might that change what meme coins are? Will their communities change? Will they start developing more real-world uses beyond just speculation and fun, maybe because these new institutional investors demand it? Or will they stay primarily as these cultural speculative tokens, just now available in your brokerage account? How does that core identity evolve?
That's the million-dollar question, isn't it? The soul versus the suit.
Exactly. Something to chew on. Now, look, we love diving deep like this, breaking down these complex topics. And honestly, the best way you can help us keep doing this, keep bringing you these insights, is to engage.
Yeah, it really does make a difference.
It truly does. So if you found this valuable, please hit that like button, subscribe to the channel if you haven't, and ring that notification bell. It seems small, but it massively helps us with visibility, helps more people find this content, and genuinely supports us in putting in the work to create this kind of deep dive analysis.
We appreciate it.
We really do. Thanks so much for joining us today as we explore Dogecoin's wild ride towards Wall Street. Until next time, stay curious, keep learning, and keep asking those big questions.